we're going to really zero in on something that I think is incredibly relevant for a lot of people right now. And that is taking control of your finances while you're still working. And doing this with the current economic climate in mind, where we're seeing more and more talk about potential layoffs across all these different industries. And I want to be clear right up front, this isn't about trying to scare anyone or make anyone feel anxious.
Right. It's not about fear-mongering.
Yeah, exactly.
It's more about being proactive and strategic.
Mm-hmm.
We're seeing these shifts in the economy, and unfortunately, sometimes that can mean job losses. And being prepared for that possibility.
Yeah.
I mean, it's just smart financial planning.
Yeah, and it's really about shifting from this idea that we used to have, maybe that there's this guaranteed job security. I think a lot of people are realizing that that's not really the case anymore.
No, right.
And the thing is, a layoff isn't just about the immediate loss of income, right? There's a real emotional toll there, too.
Oh, absolutely.
The stress, there's worry, a lot of anxiety.
Absolutely. And, it can really affect your sense of security. And if you're not financially prepared, I mean, it can lead to serious financial strain as well.
Totally. And that's exactly why our focus today is on shifting from that old idea of job security to building genuine financial security, the kind of security that helps you navigate any financial challenge, including a potential layoff.
Right. So the mission for this deep dive today is pretty straightforward. We're going to explore the very specific, actionable things that you can start doing right now to build this financial safety net.
Yeah, tangible steps.
Yeah. Creating options for yourself, really putting yourself in the driver's seat so that you can feel empowered, especially when you're faced with something unexpected.
Exactly.
So if you've ever had that nagging feeling about job security, or if you just want to feel more in control of your financial future, this is definitely for you. So where do we even begin? Where does someone start when they're trying to build this financial safety net? Well, with so many things in personal finance, it all starts with really understanding your money. Where's your money coming from and where's it going? So we're talking about budgeting.
Right.
I know for some people that word feels kind of restrictive, but at its core, budgeting is about making conscious, informed choices about how you're spending your hard-earned money.
Yeah, and I think that's a really important distinction. It's not about deprivation. It's about awareness.
Exactly. It's about knowing where your money is going so you can make choices that align with your values and your goals.
And the great thing is there are so many different ways to approach budgeting these days.
Oh, yeah. Tons of different methods. You can keep it super simple with just a basic spreadsheet where you track your income and your expenses, or you can go all in with one of those fancy budgeting apps that connect directly to your bank accounts and do a lot of the tracking for you.
Yeah, that's great. I mean, the key is just finding what works for you.
Absolutely. Find a system that you can stick with, and that gives you that clear picture of your finances.
Right. And once you have that clear understanding of where your money's coming from and where it's going, then you can start setting those realistic savings goals. Think about both the short term, maybe saving for a vacation or a down payment on a car,
Right.
but also the long term, like retirement or a down payment on a house. And then, of course, a really key part of this is actively looking for ways to increase the amount that you're able to save each month.
Yeah, and this is where it gets interesting, right?
Yeah.
Because it really forces you to ask yourself, okay, where can I potentially free up some extra cash flow to put towards those savings goals?
Right.
And often that means taking a closer look at your spending habits and those non-essential expenditures. Could you maybe cut back on dining out a little bit?
Mm-hmm.
Are there any subscriptions you're paying for that you're not really using? Those small adjustments to your spending can add up to significant savings over time.
Totally. And don't forget about the power of negotiating. Sometimes you can call your internet provider or your insurance company and just ask if there are any better rates available.
Right? It's often worth that quick phone call. You can be surprised at how much you can save.
For sure. Now we have to talk about debt.
Yeah.
Specifically, high interest debt, like credit card balances or personal loans.
Yeah.
Because those interest payments can really eat away at your financial progress.
Absolutely. Think of that high interest debt as like a huge anchor weighing you down, right? Preventing you from making real progress towards your financial goals.
Yeah.
So prioritizing the repayment of that debt is so important. Consider things like debt consolidation, where you might take out a new loan with a lower interest rate to pay off those higher interest debts, or refinancing your existing loans to try and secure a better interest rate or lower monthly payments. And a really key piece of advice here: try to avoid taking on any new non-essential debt.
Right. Yeah, that's a slippery slope for sure. So let's say you've got your budget in place, you're working on saving, and you're tackling that high interest debt. What's the next level? Like, where do we go from there?
That's where we move into the world of investing. This is where your money has the potential to really grow beyond what you typically see in a standard savings account.
Right. And I know investing can feel a bit intimidating for some people,
Yeah, I get that.
but it doesn't have to be.
No, not at all. The basic idea is you're putting your money to work in different types of assets, hoping that those assets increase in value over time.
Right. And diversification is key here, right? Like not putting all your eggs in one basket.
Huge. Diversification is all about spreading your investments across different asset classes. So you might have stocks, which represent ownership in companies. And when those companies do well, the value of your stock goes up.
Right.
But stocks can also be more volatile. Their value can go up and down more dramatically.
Right. Yeah. Higher risk, higher potential reward.
Exactly. Then you have bonds, which are essentially loans that you're making to a government or a corporation. They tend to be more stable and less risky than stocks. And then you have real estate, which can provide rental income and also has the potential for its value to appreciate over time. So each of these asset classes kind of plays a different role in a well-diversified portfolio.
Right. And there are different philosophies or approaches to investing as well, right?
hmm
Like growth investing versus value investing.
Totally. Growth investing is all about finding companies that are expected to grow really quickly. Their earnings, their revenue, all of that. Value investing, on the other hand, is about finding companies that seem to be undervalued by the market. Like their stock price is lower than what the company's actual worth seems to be. So they're both considered long-term strategies, but they come at it from different angles.
Right. So what advice would you give to someone who's brand new to investing? Like maybe they're feeling a bit overwhelmed by all these different options and strategies.
I think it's so important to remember that you don't have to figure this all out on your own. There are financial advisors out there who can help you. They can assess your risk tolerance, help you define your goals, and then put together a personalized investment strategy that aligns with all of that.
Okay, so we've laid some important groundwork here. Let's talk more specifically about that layoff safety net that we mentioned at the beginning. Like, what are the essential things that you need to have in place?
Well, the foundation of your layoff preparedness is your emergency fund. This is your financial cushion, your immediate safety net if you suddenly lose your income.
Okay, so how much should people aim to have in that emergency fund? I think that can be a really daunting question for a lot of people.
A good rule of thumb is to aim for 3 to 6 months worth of your essential living expenses. So think about your rent or mortgage, your groceries, your utilities, all of that.
Okay.
However, depending on your individual circumstances, you might want to consider having even more saved.
Right.
So if you have dependents, if the job market in your field is particularly competitive, or if you have a lot of fixed monthly expenses, a larger emergency fund can give you extra peace of mind.
Right. Makes sense. And if you do have to dip into that emergency fund, make sure you prioritize replenishing it as soon as you can.
Oh, absolutely. Even starting with a smaller goal and gradually building up your emergency fund is a great first step.
Yeah, for sure. What else do people need to understand when it comes to preparing for a potential layoff?
Severance packages.
Yeah,
Those can vary a lot from company to company.
right.
So really try to understand what your company's standard policy is. What factors determine how much severance pay you might be offered, and whether there's any room for negotiation.
Right.
Also, make sure you understand how severance pay is taxed, because that's going to impact the actual amount you receive. And look into how receiving severance pay might affect your eligibility for unemployment benefits.
Right, because those rules can be tricky.
They can, yeah, and it can vary depending on where you live.
Right. So unemployment benefits, that's another crucial part of that safety net.
Absolutely. And this is something you should research before a layoff happens. Don't wait until you're already in that situation. Take some time to understand the eligibility requirements in your state, the process for applying for benefits and how much you might be eligible to receive. Having that information ready to go can make things so much easier if you do end up needing to apply.
And of course, we can't forget about health insurance, especially in the US. What typically happens to your health insurance if you lose your job?
To continue your employer-sponsored health insurance coverage for a period of time after you leave your job, but the catch is you usually have to pay the full cost of the premium yourself, and that can be really expensive.
Yeah, it can be.
So it's definitely something to factor into your financial planning, to
Yeah.
understand those potential costs ahead of time.
Right. So we've covered building that solid financial foundation, making your money work harder through investing, establishing that critical safety net.
Oh.
What's the next step in making yourself truly resilient?
This is where diversifying your income streams comes in.
Hmm.
Relying solely on one job as your only source of income, that can be really risky.
Mm.
Having additional income sources, that not only boosts your financial health, but it also acts as an extra layer of protection. If something happens to your primary income, you've got something to fall back on.
So what are some practical ways that people can start diversifying their income?
Well, side hustles and freelancing are a great place to start. Think about your skills, your hobbies, your passions. Is there anything you could offer as a service? Maybe you're a great writer, a graphic designer. You have some specialized knowledge that other people would pay for. There are all these online platforms now like Upwork and Fiverr that make it easier than ever to connect with clients.
Right.
And if you decide to go this route, make sure you do your research. Understand what other people are charging for similar services.
Yeah.
Set your rates accordingly and be prepared to manage your time effectively so that you can balance that side hustle with your main job.
Right. And then there's the whole world of passive income, which always sounds so appealing, right? The idea of earning money without having to constantly work for it.
It does.
Yeah.
And there are a lot of different ways to approach passive income. Investing in dividend-paying stocks, as we talked about earlier, can generate regular income. Owning rental properties can be another avenue, although that does come with some management responsibilities. Creating and selling digital products, things like ebooks or online courses, can be a great way to generate passive income, especially once that initial work is done. Affiliate marketing, where you earn a commission by promoting other companies' products or services and content creation, like building a blog or a YouTube channel, and earning ad revenue. These are all possibilities. Most of them require some upfront work and effort to get going.
Right.
But the goal is to create these income streams that continue to generate revenue with less and less direct involvement from you over time.
So it sounds like there's a real mindset piece to this as well. Like it's not just about the numbers and the strategies, it's also about how you approach these challenges mentally.
Absolutely. Cultivating a resilient mindset is crucial. It's about viewing setbacks, including layoffs, as temporary challenges, not defining failures or reflections of your self-worth.
Yeah, that's so important. It's so easy to internalize a layoff and feel like it's your fault. But like we said at the beginning, it's often due to these bigger economic forces that are completely outside of your control.
Right.
So it's about maintaining that long-term focus.
Exactly. And building a strong professional network is crucial too, especially during times of transition. Go to industry events, connect with people on LinkedIn, nurture those relationships because you never know where your next opportunity might come from.
Right. And I think in today's job market, continuous learning and skill development is more important than ever.
It really is. Investing in yourself by learning new skills makes you more adaptable, more marketable in the long run. Take online courses, go to workshops, actively seek out opportunities to develop those in-demand skills.
Right. And during times of uncertainty, don't forget to take care of yourself. Prioritize your well-being, maintain a positive outlook, manage stress through spending time with loved ones.
Yeah. And if you're feeling overwhelmed or struggling to cope, don't hesitate to reach out for support. Talk to friends, family, or a therapist. There's no shame in asking for help.
So to sum all of this up, we've talked about the importance of shifting from job security to financial security, building that solid financial foundation through budgeting, saving, and managing debt. We talked about making your money work harder for you through investing and creating that layoff safety net with an emergency fund, understanding severance pay and unemployment benefits, and then future-proofing your finances by diversifying your income streams.
And to get you started on this journey, here are a few things you can do right now.
Okay.
First, track all of your expenses for the next week. Get a really clear picture of where your money is going. Second, set up an automatic transfer from your checking account to a savings account, even if it's a small amount. It's about building that habit.
Right.
Third, research at least one potential side hustle or investment opportunity that interests you.
Right.
Fourth, look at your budget and find at least one area where you can realistically cut back on spending without sacrificing your quality of life. And finally, calculate how much you would need in your emergency fund based on your essential monthly expenses.
So taking control of your financial future and preparing for potential challenges like a layoff is all about building resilience, creating more options, and having more flexibility in your life. It takes discipline, it takes commitment. But that peace of mind and that feeling of empowerment that come with financial security, they're worth it.
They absolutely are. So here's a final thought to leave you with. What would true financial freedom enable you to do in your life? What dreams would you pursue? What passions would you explore? Preparing your finances right now isn't just about weathering storms, it's about building a future where you have more choices, more control over the direction of your life, regardless of your employment situation.
And that's a really great place to end it. I think that's a really inspiring thought.
I hope so, yeah.
So thanks for joining us on the deep dive today. Until next time.
Take care.